and I'm going to be helping you today. We're going to talk a little bit about long-term care um, and essentially how you cover those, what can be extremely large costs. Um, so let me just tell you, there we go. Let me tell you just a little bit about who GEBA is. It is Government Employee Benefit Association. We were founded by NSA employees over 65 years ago, and we were designed then to provide supplemental benefits that weren't offered by the federal government. And we are still doing that. So we're going to help with things like investments, dental insurance, pet insurance, things like that, to really supplement the benefits that you have already through the federal government. So what we're going to cover today is taking a look at long-term care, what it means to be receiving long-term care, all the definitions of the industry and of long-term care insurance, what kind of costs you can expect, and what are some ways to help cover those costs. So many of you may have been receiving different emails, fork in the road, deferred retirement, or anything. That is not something that we're going to go into today. But as a member of the GEBA wealth management staff and a financial planner and a chartered federal employee benefits consultant, that is stuff that we are able to help you with. So our team, we've been fielding a lot of questions to help people, know the differences between deferred retirement, reduction in workforce, early retirement, and, the most important question, am I prepared? Am I ready to retire if that's what's in my future? So again, we're not covering that, but you know where to find GEBA, and that is something we can help you with if it pertains to you. So your financial plan is, a bunch of these different interconnected topics, accounts, things like that. Your federal pension is a big part, but, so are taxes, so is insurance and long-term care. So at GEBA, we do a lot of education for federal employees. And so we actually have full seminars, webinars on each and every one of these topics, and kind of to show you how they all interact. So, as you can imagine, if you have a big change in long-term care expenses, if expenses shoot up for you sometime in retirement, it's going to affect everything else. It's really going to have a big effect on your investments. It can affect your taxes, your deductions, and even legacy planning, how much you're able to leave as a legacy to your loved ones. So, we encourage you, we are financial planners, but we encourage you to talk with a financial planner and, get a good idea of how these things are also interconnected. Okay, so long-term care. First, kudos to all of you for even sitting here and listening, because it's a big topic. There's so much involved, and it's actually a little it can be a little uncomfortable, and at times, many of you might have had a loved one, a parent that needed long-term care assistance, and that can be hard emotionally and financially, and it can just pull you in so many different directions as you're trying to be both a caregiver and for older people, parents needing assistance, and then still trying to care for maybe younger ones and keep your work-life balance. So kudos to you for, trying to get some more information. I realize that this webinar is designed to throw so much information at you. And we really just want you to be able to absorb maybe half of it and the other half say, okay, I'm going to make a list of questions. I'm going to take this and learn how to ask good questions about this topic as I start to learn how it's going to relate to me. So long-term care is the broad definition. It covers any care that you might receive in your home, maybe in an adult daycare facility, assisted living, nursing home, hospice. Those are all considered long-term care. And long-term care is defined as a chronic illness. That means that your doctor has documented that they do not expect for you to recover from this. So for example, if you're in a car accident, you know, hurt your leg and stuff, that might not be a chronic illness. You'll go through some physical therapy and stuff, but you're expected to recover, regain that strength. Long-term care is where they believe it's chronic and there will not be that much more improvement. So long-term care is, you know, chronic, but also defined by a doctor as someone who needs help with 2 out of the 6 activities of daily living. Or it could be just a cognitive impairment. Then you'd only need that one. Okay, so in order to receive any long-term care benefits, a doctor would have to certify this. And this is if you were to receive a benefit under long-term care insurance. So let's take a look at, you know, why this is so important to take care of. As I showed you those gears and stuff, long-term care can really throw you know, a wrench into your whole plan. The cost is very high, and so is the probability. You know, roughly about 70% of people who are age 65 are going to need some kind of long-term care assistance during some point in their life. And the amount, females actually need this assistance usually for more like 4 years. Males are a little bit less. And as you can imagine, the expense is going to be based on the area in which you live or receiving the care. So we are located right outside of Washington, D.C. in Hanover, Maryland. And so the cost there is over 100,000 per year, 137,000 per year for someone to have to be in a nursing home and receiving some kind of care. So this is just a fun little fact here. You know, the long-term care expenses that have been the longest claims. There's a male who's received over $1.5 million. He was receiving long-term care assistance for almost 10 years. Female, 20 years. I was just speaking to someone yesterday about her long-term care policy, and she goes, you know, I have to be prepared because my mom was in a nursing home for 18 years. So although the average is more like 3 to 4, there definitely are people who are receiving that kind of assistance for a very long time. So the cost of care is going to vary based on the amount of assistance you need. So if you go into like a nursing home or assisted living, they're often going to have levels of care, you know, meaning, you know, do you need help with all your dressing, or maybe you need help with only some of it, and that'll help to determine what your cost is there. As you can imagine, there's increases every single year in terms of in these facilities. Um, so you're going to have to expect to receive those kind of increases every year as well. So let me give you a little bit of an example. So if you're someone, let's say you're 55 now, and maybe you might start needing long-term care assistance at age 85, okay? If the cost of care now is 137,000, and we assume that goes up at 3% every year, we can assume that the cost, your total cost for 4 years of care will be $1.3 million needed to keep you in a nursing home for 4 years. So sometimes and that's only for one person. If it's a couple, then you could have that for two people. That is a huge amount. Again, huge monkey wrench in your whole financial picture. So what if you wanted to pay it all out of pocket and just set aside some money now? If we assume a 5% rate of interest on your funds, that means you'd have to put away about 300,000 today. Sit there, don't touch it, let it be invested for 30 years, and then you'd have enough to pay that 1.3 hypothetical long-term care cost. So huge amount, whether you do it as a single investment or annually or even monthly. So how can you cover that? Well, you can do self-insurance, and there are people who self-insure. They're going to pay for that expense themselves. But where would that money come from? You need to look at your pension, maybe your thrift savings, your other investments, Social Security, real estate. Those are all different ways that you can help to, gather that money to pay that bill. And the reason why long-term care insurance comes into play is because, do you want to share that risk? Is it better to share some of that risk with an insurance company? It's just like, a fire policy on your house or something. You're going to share that risk. You don't know whether you're going to be someone who needs all that much long-term care assistance, but it's really nice to be protected there. Excuse me. And again, a long-term care plan does not have to include insurance, but a plan means you've talked through all the options with your family members, with your spouse, looked at your finances, talked to a financial advisor, maybe get some second and third opinions, and you've come up with what that plan is to help you navigate in that direction. Okay, everyone's plan is going to be different because everyone's family is different, things like that. So if you were to look at long-term care insurance, when's the best time to look at that? And the answer, it is insurance. So it's going to be based on your age and your health. So the longer you put it off, the older you are, it's going to cost more. And if your health declines, then that can make it harder for you to get insurance. Long-term care insurance companies, they also do cognitive little questions or interviews kind of thing for people who are, in their 60s or 70s. So that can sometimes, it's a little nerve-wracking, right? To have people ask you all these questions, testing your cognitive ability. And the other thing, if you have any kind of health event, um, sometimes they make you uneligible for insurance, and especially long-term care insurance. So most people find, as a financial planner, I'll see that people will apply for long-term care insurance. Um, when their children are kind of out of the house and that expense associated with your children is gone, then that's kind of the time that people start to say, okay, we have a little money freed up. Now let's start focusing on us. And is this something we need to look at? Okay, so all the moving parts, the definitions of long-term care. Let's take a look at those. So the first one is um, your daily benefit, or some companies have it as a monthly benefit. Um, and this is where you get to build your own long-term care insurance coverage. You can choose a benefit from like $50 a day, or $500 a day. You know, $50 a day is not going to do too much when you have a nursing home bill that can be over 100,000. So sure, the cost of that kind of insurance is going to look very appealing because it's going to be very low, but the benefit it's going to give you when you absolutely need it is also going to be tremendously low. That's really not going to help you too much. So on the flip side though, do you really need um, an insurance policy that's going to give you $15,000 a month? Uh, in all my years of doing this, I would probably say no. And here's the reason why. Most people go on like a continuum of care. So you might start off that you need a little bit of assistance. Maybe you need an aide to come to your house, you know, 2 or 3 times a week, only for half a day, to help you with bathing or some of those different activities of daily living. It'll be expensive because, to get a nursing assistant to come to your house is at least $30 an hour, but it's not going to be 15,000 a month, right? So, oftentimes the long-term care is you don't want to have so much set aside for that and have it be a benefit that you never use. Again, I'll liken it to like a fire insurance policy. You hope that you are not going to have to tap into that policy, but you don't want to have it so that the monthly premium is just kind of crippling your budget. Okay, so most people kind of look and say, hey, if the cost of care is going to be like 9,000 a month, maybe I can cover, 3,000 or 4,000, maybe half of it. And then I can look to maybe get some insurance to help me with the other half. So that's typically what we see. Um, there are some companies that will allow you to set different limits and stuff for home health care versus in a facility. That's not usually what I recommend to people. Usually the cost savings um, does not outweigh the decrease in benefit that you would receive. Okay, so the next thing is the benefit period. So how many years are you going to receive that benefit? Okay. It used to be that there were many policies that offered you an unlimited benefit. So in other words, you would receive that benefit for as long as you needed it. As you can imagine, that's a big unknown for insurance companies. And so many of them have dialed that back to a specific number of years. I will tell you, I already said that the average age is about 3 years. in a nursing home. So most of the time you see benefit periods that are going to be like in the 2 to 5 range. Um, and so that means that the insurance carrier is going to give you an amount, say $6,000 a month for 12 months and a 5-year benefit period. And so your benefit would be start out at like 360,000. Okay. Let's say you have that first month and your benefit and your bill is a lot more than 6,000. 6,000 is all you'll get from the insurance company. The rest comes out of pocket from you. So most policies have what's called an elimination period or a waiting period. I liken this to your deductible, right, on your health insurance or, car insurance. This is the portion that you pay out of pocket in the beginning, and then the insurance carrier starts paying the rest. You can usually get pretty fancy and have like no waiting period or up to 180 days waiting period. 90 days is the most popular. And there's a very good reason for that. It coincides directly with how Social Security, or I'm sorry, how your Medicare works. So, for example, if you were to fall and were in the hospital, and Medicare covers that at a certain sliding scale, but after 90 days, the Medicare assistance with that hospital stay and recovery starts to go away, and that's exactly when a long-term care policy could kick in. So 90 days is usually what we see there. Another moving part is inflation protection. So we've talked about how the monthly benefit and the number of years gives you a set dollar amount. But now we want that dollar amount to keep up with inflation because we're not going to use it today. We're going to be using it in 20, 30 years. And so you can pick an inflation protection amount to make sure that if you plan that it's going to cover about half, the inflation protection, helps to keep up with that. Right? Obviously, you choose 5% inflation protection, it's going to cost you more than if you choose a 3%. As you can imagine, having inflation protection is going to be very important for people who start to get a policy at a younger age, say like 50, 51. People who are looking at this in like 75, inflation is not going to be as large a component here. Okay, so those are all the kind of costs. Let's take a look at, how it would equate into a typical long-term care insurance policy. So if I was looking for $6,000 of a monthly benefit with 3% inflation, a 90-day elimination period, I'm in great health. So for a male, the annual premium would be just around $3,000. Females, we live longer, so that's where the females for 3 years is more like 4,700. Females are always more expensive when it comes to long-term care. Okay, so that was an individual, male and female. So, and probably one of our most popular things is shared care, and that's for a couple. People can get discounts. Basically, the insurance company figures, you guys have been together long enough, and you're going to take care of each other when you need that assistance. So that might help to reduce the costs a little bit. So you'll often get a discount if you have a significant other, and you can see the discounts here for shared care and individual policies. Let's take a look at how that shared care actually works. So I would have a $200,000 policy. Right here is person A. My husband would have a $200,000 policy as person B. We both got these policies at the exact same time from the exact same insurance carrier, and that is important. Um, and so then let's say that I go through all of mine. I've needed all of my insurance, my long-term care insurance. Um, I can tap into my husband's long-term care insurance. Um, and then I might use like maybe 3/4 of his. Um, so, that the probability of one of the two of us needing this kind of care is pretty high, but it's also kind of nice to know that we can share it back and forth. Um, so that is probably one of our most popular things is a shared care policy. So this is an example of an actual policy that was purchased in 2007, a male and a female, different ages. Their combined premium was just around $3,000 annually. They had 4 years of coverage, and it gave them a benefit pool of just over 400,000. Now we take a look at them in 2022, and there's a couple different things that we see here. Number one is that because of the compound inflation, their monthly benefit has gone up to 9,000 per person instead of the 4,500. So it's doubled. Um, we do see here that their premium has gone up. Okay, so many long-term care policies, they try to keep the premium at a very level, consistent basis, and it does not increase every year. However, when the insurance carrier needs to make some adjustments and increase the premium, that can happen. Um, I will tell you that insurance carriers actually have to go in front of the state insurance commission, showing all their proof of needing to go up. So it's not something that will double every year, but it is something that you should expect to happen like once in the lifetime of having the policy. So you can see here that their policy did go up. But their benefit pool also went up significantly there. So let's look at some of the other things like as alternatives to that kind of traditional individual long-term care or shared care. So the federal government did have a federal long-term care insurance plan. It is not open to any new enrollees. We thought that it was going to open in December of 24, but it has now been pushed back even further. So we do not have any dates as to when and if that may open again. If you have the federal long-term care plan, it is still good. You can call them, get information about your plan for them, but it's not something new that anyone can sign up for. um, and so I don't want to discourage you, get you upset that it's not open anymore, because in my opinion, there's a lot of benefits to being able to shop around for the best carrier for you for long-term care. So for example, when I showed you the partners discount, the shared care, that is not a kind of plan that the federal insurance, long-term care insurance had available. And they also had, uh, it was one flat group rate. So in other words, if you had maybe one or two little health issues and stuff, they would just say, no, you're not eligible. They would not say, oh, you're eligible, but your premium might be a tad bit more. They didn't do that. So I think those are two big benefits to being able to shop around for the plan that works best for your family. Um, I'm going to go now through a couple different like other options. Um, you know, life insurance or annuities with long-term care riders. They work a little bit different. If you have a need for life insurance or you currently have an annuity, those are things that you might, you know, kind of shift and have it more focused on providing long-term care as well. And then we'll talk a little bit about things like a reverse mortgage or a continuing care retirement community. um, this is like my favorite slide here because it really gives you a good idea of all the different funding sources that you can use for long-term care, what's the best, and that kind of thing. So if you are like in excellent health, you really get a lot of leverage by having a standalone long-term care policy. And by that, I mean like shared care or an individual policy on you. That really does give you the most bang for your buck. People like life insurance or annuity long-term care. What it usually provides for you is maybe not as much leverage, but you still can, you know, have that life insurance benefit for your beneficiaries if you don't ever use it, things like that. When we get down to people who are already needing a lot of assistance and not really able to qualify for long-term care, something like a SPIA at the very bottom here is a way of them turning current investments into an income stream that can help to provide a monthly income. Okay, so let's look at an example of life insurance with a long-term care rider. So this particular example has you paying, you know, a single amount upfront. So you can set it up as kind of a one-time pay. You can pay it over 5 years. You can pay it over life. It really has a lot more bang for the buck if you're able to pay it over 5 or 10 years. There is a return of premium option. That's not that, I don't feel that it's that important, but that's there if you change your mind kind of thing. The death benefit here, the death benefit is pretty much, you know, very similar to what you initially put in. So you're not looking to have this huge death benefit. The real benefit here is the long-term care pool that you can have if you need that. So life insurance with a long-term care rider is great because most of them are what you call like a indemnity or cash, meaning once you qualify for needing that assistance, then you're not going to have to submit any receipts or anything like that. You can just get the long-term care benefit, that cash benefit deposited to your checking account every month, sorry. So that's really, really nice to have that cash indemnity. So obviously, the more bells and whistles you get, you know, things that we all want, like a cash indemnity or, oh, a death benefit if I never use the policy. that makes it more expensive. So again, the more bells and whistles you want, the more options you want, the larger the cost is going to be. Um, this is one for a male and female, so they do a joint policy here. Again, joint usually gives you more bang for your buck if you can both qualify for a policy. Um, the other thing that life insurance with long-term care riders has is that on these ones, since they are usually paid all up front or paid off within 5 to 10 years, it usually does give you a guarantee of never increasing your cost. Um, so sometimes, life insurance policies will have a rider that enables you to take out your life insurance at a reduced rate when you have long-term care expenses. So that is also something that's very popular as well. So annuities with a long-term care rider, um, oftentimes what we see there is the annuity is much easier to qualify for. And so let's say, you put in 100,000, the annuity will give you a guarantee, like if you need it for long-term care, it can provide up to 300,000. Might sound really great, and it is, but they're going to limit, the 300,000. You take out a little bit at a time. It's not going to be able to come out all at once. Um, this is life insurance. Sorry, I guess I mentioned this before, with a chronic illness rider where you get to take it out early if you need it to pay for long-term care. Again, you're going to have that rider put on the life insurance policy when you purchase it. So there's short-term care policies. Um, these are not, they're not going to provide you with that much of a benefit. There's something where the premium changes every single year based on your age, so that can start to get very expensive too. But there are fewer health questions. This is actually a kind of policy that we do not see very much. There's also home health care only policies. Um, a lot of times it's more like it likens itself to buying uh, hours of a CNA's hours to come out and take care of you. So if you buy, let's say, 100 hours right up front, they can give you a discount on that kind of thing. So that's what it likens itself to. Um, and this is a policy in Maryland that is very similar to that. Um, so a myriad of different policies, different kinds of things. How do you consider, what's best for you? Um, there is actually quite a difference if you decide you're going to receive your care internationally. You definitely want to have a cash indemnity because it's very hard to submit, doctor's receipts from foreign doctors and that kind of thing. So that's a big thing to take a look at. What do you qualify for health-wise? Um, smaller health issues, higher blood pressure, things like that. Those aren't the big things. But sometimes if you have multiple things going on at the same time, that can put you in a little bit different health class rating. We talked about how to build a plan that works for you. And oftentimes, like, thinking of one or two plans, how much can I do on myself? Maybe I want to add this to my annuity, add a rider, and maybe I want to do something else. So you might have a couple different ways you're going to tackle your long-term care insurance. So reverse mortgage. I definitely, in doing financial planning, have come across people that say, my house is my long-term care plan. And that could be very well and good, but if it's a couple, how is that house going to let my husband stay there and at the same time pay for my nursing home expenses? It usually can't. Excuse me. Um, and if we were to do a reverse mortgage, um, that there's a lot that goes into a reverse mortgage. They're going to appraise your house, and then only about half of the value of your house would be available for you. And so they'll make you keep a reserve. They're gonna take a look at the taxes and the maintenance and everything on the house, because you need to keep that up as you're taking that reverse mortgage. And you're going to be paying an interest rate at the current interest rates to be taking it out and everything. The other thing to be mindful of with a reverse mortgage is, if I'm a single individual and I want to do a reverse mortgage, I do have to be back living in the house after 1 year. So I can't keep it on in perpetuity. CCRCs are very, very popular now. It's called a continuing care retirement community. And so oftentimes what you see is an independent building or separate homes where someone, usually from the age of like 60 to 80, 90, is living there independently. They may have some meals provided, the maintenance is provided, taxes are taken care of, all of that. And then maybe also on that same campus in a building next door, they're going to have assisted living. So if you need assisted living, you can move to the next building there and receive that. They're going to have nursing home also somewhere on that site. So if you're out for a hip replacement, you need extra assistance, you might stay in the nursing home section for a couple weeks and then go back to your apartment or your house. It's kind of nice that it can be all in one place. But again, the more bells and whistles you get, the more you're going to pay for that. And so what you're going to see there is oftentimes you have to pay an entrance fee, and entrance fees can be like around $500,000. And then you pay a monthly fee. And your long-term care insurance can kind of help you with a lot of these costs. So as we start to wrap up here in terms of long-term care insurance and different methods to pay for it, I just want to remind you there's so many different options, and it's really looking at what combination works best for you. Talk to your financial advisor, and see what works best for you. We definitely have financial advisors here at GEBA, and can help you. It's complimentary. You can just call in and we can help you with some of those things. And definitely make sure you work with somebody who understands your federal benefits, because they come into play too. You really have some great federal benefits, and the idea is really to have everything complementing each other and working together. So if you have any questions, you can put them in the chat. I will try and answer a few of them as we wrap up here. You also will be given a survey as you log out. You can put any questions or anything there, and one of our staff will get back to you and answer the question for you. So we are, again, I'm a certified financial planner, as well as a chartered federal employee benefit consultant. Oh, and our staff here, each of us has on average 15 years of experience in doing this kind of stuff. So we are happy to help you with that. GEBA has, a myriad of financial and insurance services we can help you with, doing everything from a social security analysis to also taking, a look at pet insurance or things like that. So we're definitely available here to help you with that. So I really just want to thank you for taking the time out today. And again, as you enter any questions as you're logging out, and we'll get back to you with some answers as best we can. Thank you.